have Mr. Praveen P Kadle, who's 22-year veteran at Tata Group. He spent quite a few years at the Tata Motors, which is the flagship group company of Tata, as a CFO, and done several deals, one of the largest deals by an Indian company overseas. Then he moved to Tata Private Equity in 2007, where he set up Tata Capital, which is a financial services business of Tata Group, which includes, besides the private equity, other services business as well in the financial domain. So Tata Capital has got 5 private equity funds and with a combined corpus of $1 billion. And they've done that the last 2.5 years. So I would like to ask Mr. Kadle, how did you raise $1 billion in such a tough environment in just 2.5 years?
The answer is basically, you're right, actually. When we started raising the funds, it was almost end of 2009. And it was the most difficult market condition because of the global financial crisis. And fundraising in USA was absolutely impossible. Similarly, the fundraising in Europe was also absolutely impossible for the obvious reason that these were the 2 markets which were significantly impacted by the global crisis. So we looked at the eastern part of the world, and we went and talked to many investors or prospective investors, notably from the investors from Japan, Korea, Malaysia, Taiwan, and of course Singapore. So we got fairly good response, and out of $1 billion, 1/4 of that has been raised from the domestic investors, and 3/4, that is 750, we have raised from the international investors. And out of 750, almost 600 odd has been raised from these countries. And if you look at Korea, Japan, Malaysia, if I'm not mistaken, these investors were not present in the Indian market. So in a way, we took a totally new approach of approaching the new class of investors. And these countries were relatively less impacted by the global financial crisis. Traditionally, if you look at the Japanese investors, they have, over the last 20 years, made huge investments in China. And they were looking for alternate kind of locations or alternate countries where they could make the investment. And I think the timing was perfect because they were anyway looking at reducing their exposure and risk in China, having made huge investments. So they were looking at alternate investments and alternate locations for investment. And we were at the right time, at the right place. So you can say that helped us.
LPs tend to usually invest in entrepreneurial funds where the GPs have a skin in the game. How did Tata Group manage that? I mean, you are a conglomerate and your managers are essentially employees of the group. So how did you convince LPs that, this is a way to go in India for investing in the private equity?
I must tell you that while, yes, we are all employees of the Tata Group, but there's a lot of entrepreneurial spirit amongst many of our senior managers. In fact, most of the managing directors, CEOs of our group companies have turned out to be successful entrepreneurs, not only now, but if you look at the history of the group, right from, say, if you look at the creation of most of the companies or their subsidiaries have been created by the employees who have really taken the kind of an interest as entrepreneurs. Yes, of course, the group holding in Tata Sons, or the Tata family holding in Tata Sons, is just about 3%. So in a way, we're all, even including whether it was during Mr. J.R.D. Tata's time, Ratan Tata's time, or even Mr. Cyrus Mistri's time. And I feel Cyrus Mistry, of course, his family has got 18% holding in Tata Sons. But if you consider that as also as a minority holding, all of us, in a way, are custodians. We are trustees on behalf of the shareholders. And if you look at Tata Sons, for example, 67% of our holding is with 2 public charitable institutions. So we all have acted as custodians. We all have acted as trustees because the money which finally goes to the shareholders of Tata Sons goes to the public charitable activities. So we have blended the entrepreneurship with a sense of responsibility. And because we finally are answerable to the society at large. And that's why we have been in a position to bring the best out of whatever we have done. So I think I would give that as an explanation. The other point is I'll just talk about we are all professionals. We have blended our experience, our educational background with that spirit of entrepreneurship. We all have the freedom to pursue the right kind of a business, or entrepreneurial kind of actions. Of course, we are very closely monitored or supervised by the board. All of our boards are manned by the independent directors of impeccable, kind of a record. So I think I would say Tata Group represents the best of professionalism and with the trusteeship concept and all of that.
Were you personally involved in raising money for the funds? Did you do any meetings with LPs and or your investors in the funds?
Yeah, very much.
Yeah. So what are the questions that a couple of questions that came to your mind from LPs?
No, the first part was when we started, as I said, in 2009, the first concern which was expressed by many of the LPs was that the large industrial houses have not succeeded in the private equity business, number one.
Yeah.
Number two is, of course, I heard some of the comments which we just made in the previous session, that you are the first time private equity players, so you don't have the track record. So this was the second point. And third point is, will there be any conflict of interest? Because Tatas are all there in almost all the sectors of the Indian economy. Wherever you're operating, you've got a very strong presence, either number one or number two. So would there be kind of a conflict of interest when you are making investments in some of these companies? And would that conflict of interest give the right kind of a return to the investors? So I think these were the three main concerns. And can I answer what?
Yeah, what were your answers for this?
I think let me take the first point. We are a large industrial house, yes. But if you look at it, Tata Sons itself, which is almost now more than 100 years old, itself is a private equity house. I mean, Tata Sons over the period has promoted all these companies, starting with Tata Sons, Indian Hotels, you look at Tata Motors. So all these companies which have created significant value now for the investors, they were all promoted as private enterprises, unlisted enterprises by Tata Sons. And we created significant value for the investors through these companies. So in a way, Tata Sons itself is a private equity house. So maybe not following the 2/20 kind of a formula, but otherwise we are a private equity house. And therefore, I would say that we have the passion as well as the experience and track record of running the private equity business. Maybe not in the strict formula, as I said, formula of 2/20. Then talking about the other advantage of large industrial houses, that you bring in the expertise, because all of us talk about in private equity business, you need strong operating experience. If you want to be purely financial investor, I'm not very sure how much value you can create in the investee company in which you are investing. So unless you've got a very strong operating experience and you get involved in the management and affairs to whatever extent it's possible, you're not going to create value in those companies. So Tata Group, because of being part of a large industrial house, we bring to the table that kind of an industrial experience which many private equity funds don't have. And so that was the second point. The third point is, and when we are talking about our focus in private equity, is to make investments in the Indian companies, in India. So as we said, we have a large presence in most of these sectors of the Indian economy, and therefore we have a huge Tata ecosystem. I'm not talking, when I talk about Tata ecosystem, I'm not talking about Tata companies, but non-Tata companies which are operating in the Tata ecosystem. So you're talking about the suppliers to Tata companies, customers of Tata companies, and so on and so forth. So these companies kind of offer huge investment opportunities. Many of them are today not only looking at the Indian market, of course they have created a strong presence or creating strong presence in India, but also are looking outside of India. So there's a huge opportunity to invest in these companies in ecosystem where we can, as a group, contribute significantly in terms of identifying the right opportunities directly, not through investment bankers. So it really helps in terms of identifying the investment opportunities at an early stage before the, many of these private equity players complain about the very high value expectations from the promoters. Because I must say, I don't know whether there are any investment bankers here, no offense to them, but when the opportunities are brought to the table to the private equity players by investment bankers, as we all know, in India there are not many that good opportunities, and too many people chasing too small opportunities, naturally the valuation expectations go up. Whereas in our case, we can identify the opportunities at an early stage without bringing any investment banker to the table, and we can make investment directly. That's another plus, positive factor. The other point is, many times we look at exit option through public offer, IPO. We all know the IPO market is very bad. I don't know how and when it will improve. Now, that's not the only exit option, according to me. And you can bring in strategic investors. And that's where we can bring to the table the strategic investors. Because being a large industrial house, when we have presence in almost all the sectors of the economy, in all the industries, so whether you're talking about automobiles, steel, telecom, whichever sector you're talking about, IT, we can bring the strategic partner who can be brought in and give an exit option. So and of course I talked about the operating kind of a support in the operations. If you look at it in many companies where we have now made investment, and I can talk about one company here, we invested in a foundry company in 2010, end of 2010. This was a hugely loss-making company. Today it's a very successful profit-making company. And why? Because we could bring in the technical expertise, the marketing expertise, and of course the quality and so on and so forth. Now we brought down the losses in terms of the wastages from some 17% or whatever it had to about 7-8%. And the work is still not complete. We need to bring it down to maybe 2 or 3%. This I'm talking about the line rejections and all that. Now this is something which we can bring in because of the expertise that we have. And we go to the extent of even providing the support on the HR side, IT side, treasury side. So with the industrial background or experience that we have, we can bring to the table everything that an entrepreneur or a businessman would like to have.
Yeah. So obviously, there are a lot of synergies that the group can bring in. But there could also be some conflict. For example, one of your portfolio companies would look at probably another strategic player as an investor or an acquirer. So in that case, how do you manage the conflict between the promoters and, the Tata private equity?
I think let me put it this way. We have I'm the only person, we have 5 funds, yes, but I'm the only person, you can say, from the group who is directly or indirectly involved in the private equity business. There is no pressure or any involvement from any of the Tata directors. Yes, if there is an opportunity, the opportunity will be forwarded to me or to our fund managers, but nowhere there is any pressure from any of the Tata companies or directors which would force us to make an investment. Each fund has got its own independent investment committee, and we have defined where the conflict would be, and when the conflict, for example, if a company in which we are looking at making an investment, if it happens to be a supplier to Tata company, or if it is a company it's a customer of Tata company, or Tata Capital as a lender has lent money to that company, or any of the Tata companies have some shareholding in that company, we have identified these 5 or 6 criteria, and so we say, okay, there is a conflict. In case there is a conflict, then the investment committee, which consists of, so we have got a conflict resolution committee of the investors, on which that conflict resolution committee, there is no representation from Tata side. So the independent body of that conflict resolution committee then takes a decision. So decision making to make an investment or to exit is left to the conflict resolution committee. So I think if you have a very sound governance model, I don't see any problem.
Great. How did you build your team? You got 5 funds, and most of them have over $100 million kind of corpus. So how did you build the team? How did you attract talent? Were fund managers ready to join you, without any concerns?
I think with the Tata name, frankly, we didn't have any problem in identifying the. Yes, the same questions which LPs were asking were also asked by the prospective, joinees or partners. But once we clarified the position, we didn't see any problem.
Okay, great. So what are the various opportunities that you see in the private equity market today from the investment point of view?
Are you looking at the sectors?
Yeah, sectors, companies.
Let me talk about the sectors. We all talk about the demographic dividend India offers, and which will continue to be there for the next maybe 25, 30 years because of the demographic advantage. But I think this can be a huge liability if it is not handled properly. So which are the areas where these issues need to be handled properly so that the demographic advantage does not become a liability? So one is the healthcare. So we need to have very good healthcare and affordable healthcare in India. So that's primary need of this country. The second thing is the education. So again, affordable education is the most important thing. The third thing is, of course, we all talk about the infrastructure. So infrastructure, we all know that India has got very poor infrastructure. So that's another area. The fourth is the financial services, because if India has to grow at the rate of even, I would say, 6 to 7%, forget about 8 or 9%, but even if India has to grow at the rate of 6 to 7% over the next 25, 30 years, then we need huge amount of investment in financial services sector. I'm not talking only about banks or NBFCs, but a lot of the support areas, including some of these credit information availability, track record of the the borrowers, which is basically the credit information, plus mobile technology in financial services is going to play a major role. So when I talk about financial services, I'm talking about broader range of financial services. So that's another area. Real estate, yes, but again, the industry needs to be regulated. The industry today is not regulated, so I would advise caution when you get into the real estate. And of course, we all have been talking about India is only known for services, and if you want to make India as China has become a global manufacturing hub, and India is the global services hub. According to me, India still can play an important role in manufacturing, but certain niche areas, for example, I'm very familiar with automobile industry. So automobile component industry is one area where there is a good scope for investment, and like that you can identify many sub-segments in different parts of manufacturing industry where you can make good investments.
Okay. You have a JV strategy also for various vehicles. For example, you got something with IFC for clean tech. Then you have an investment bank in JV with Mizuho and HBM for healthcare. So how is that strategy playing out? Will you look at more JVs, and what sectors?
Yeah, wherever we need to have a partner who can bring significant value to the table, we have chosen the partnership route. Clean tech, for example, it's not just the clean technology, but we are also talking there about water resource management, waste management, and renewable energy. So in all these areas, IFC Washington has very clear mandate, especially in the emerging markets or developing markets, and therefore we decided to go ahead with them. We are now, you can say we have been chosen, and we will be signing the joint venture agreement with Power Finance Corporation to get into a power sector fund. We all know about the power situation in India, and there's a huge potential to make investments in power sector, including the renewable energy sector. So we are looking at creating this joint venture. The joint venture is more on the advisory side. The fund will be managed by Tata Capital. So that's another area. We are also looking at the new growth opportunities. I mean, the Tata Group itself is looking at the new growth opportunities or roping in some of the sovereign funds. So partnership approach really helps wherever the partners can contribute value. And I think wherever the chemistry works well.
Okay, that's very interesting. An Indian fund launching an overseas a fund for the different country. I think the first time someone is doing it from India.
No, actually, as I mentioned, there are a lot of we of course the group has been in Africa for many years, and I would say that many Indian companies also can seek. I mean, Indian companies, global Indian companies, which are looking for growth outside of India, should look at Africa. So that's why this fund, and this fund is not meant for Tata investments.
Okay.
Some investments may be for Tata companies, but would be aimed at Indian companies looking for growth opportunities in Africa.
Okay. Well, what could be the fund size that you're looking at?
It's too early to comment.
Too early to say. Okay. So it's in, when do you plan to roll this out? By when this fund will be?
Africa fund, we want to start immediately. The power fund, again, we are just signing the JV agreement with Power Finance Corporation. So hopefully, we are now in the first quarter of 2013. Maybe we'll start around end of second quarter in 2013.
Okay, great. You know, one of the biggest success stories from India is Tata's acquisition of JLR. And I hear from, a lot of Europeans that it's one of the best deals. And, Tata played a big role in turning around JLR. What do you think has Tata done with JLR?
I think,
the post-merger integration, and how did you turn that around?
If you look at, we acquired these two assets in middle of 2008. And if you look at 10 years prior to that, there were two changes, ownership changes in these two assets. Both the assets were earlier owned by BMW. Then the ownership transferred to Ford, and we bought these two companies or two assets from Ford. These were divisions of Ford, and then they spun off as a part of the acquisition process. These were spun out of Ford, and then we acquired the ownership, 100% ownership of these two companies or assets. If you look at both as BMW and Ford, these two divisions were very small parts of the Ford empire. At least I can talk about Ford. Ford was $150 billion. The two assets were hardly $10 billion. So naturally they were just about 6% or 7% of the total Ford size. Every decision making was taken from Detroit, including managing the treasury or accounting was centralized. I mean, so many mundane functions you can say were controlled. So there was, and Ford of course was going through difficult phase. So there was no money allocated for product development. And I must say that Jaguar, for example, and so also the case of Land Rover, they had their own product range which was independent of the Ford's product range. But in an effort to kind of rationalize and reduce the platforms, in auto industry, everybody tries to reduce the platform or exploit an existing platform so that the cost of product development gets reduced. So the Ford, in many cases, tried to superimpose their platform strategy on Jaguar Land Rover, which is not the right way. So I can get into many details in terms of how so many platforms of Ford were forced on Jaguar Land Rover. But this is not the session for that. So the entrepreneurial spirit of Jaguar Land Rover was killed. And therefore, and it was, as I said, part of the whole JLR, part of the Ford. Now, Jaguar Land Rover has got very strong R&D capability, which was not fully exploited by Ford. And what we did was, and this is what we did also on a much smaller scale, when we acquired the Daewoo Truck Company in South Korea in 2003, we did it exactly same thing, but here of course the scale was much bigger. So we gave that kind of a complete independence. We put a lot of focus on product development. We did not superimpose any of our Tata Motor theories or practices on JLR, and the entrepreneurial spirit of JLR, we allowed it to kind of prosper or whatever you call it. So that's really helped in terms of the revival of JLR. We of course did some cost reduction, but cost reduction was not in terms of manpower or anything. We we are today, if you look at it, the Tata Group today is the largest private sector employer in UK. If you add the Chorus, JLR, Tetley and all that put together. So we didn't cut any manpower except wherever it was very necessary, and which was done with the union consent. So we never lost any single day's production because of the labor strike or anything. And labor unions are very positive, and we paid $2.3 billion, and we paid it in 2008 June, and in less than 5 years we have made profits which are almost three times of what we spent on an acquisition of that asset.
Oh, that's a great story.
So was the case in the Daewoo Truck Company. I said earlier in 2003, it was a loss-making unit. The Koreans had, the Daewoo's story. So the creators had formed the consortium, and we bought it through the consortium, through an international bidding process. We exactly did the same thing. And that company started making profit within 12 months of our acquisition.
So are you saying you didn't change the management, you didn't send any new managers from Tata to... So you let them be and they turn around the company themselves, is it?
Okay, Daewoo Company, the existing Korean CFO wanted to retire because he was post his superannuation age, he was still working, so we sent the CFO from here, and otherwise in Jaguar Land Rover we didn't do anything.
Okay. I think when the deal happened, I remember a lot of people criticized, that move, whether it would make sense, are you going to kill your own value here in the domestic market? So how did you really go ahead with this deal? I mean, what gave you the courage to do that?
When we acquired this company, we were predominantly known as a small car company. Of course, as you know, our entry into the passenger car business is of recent origin. We started in 96, 98 time frame. So we are a relatively new player in passenger car business, and we are known to be predominantly known to be a player as a small car company or mid-sized company. And if you want to be in passenger car segment, you need to be in all segments of the passenger car. So we were not there in the sports utility vehicle, which is still at that time and even today is the most popular segment, and also we were not there in the premium car segment. So we wanted to be a full-fledged car company. Number one, we have certain rules when we look at acquisition. So what are those rules? We look for will this acquisition give us new technology which we don't have? So there is always the buy basis, create your own. And if you create your own technology or you need to spend money, time to market is also important. So if you get a technology which is high-class technology and time to market gets reduced, then, so that's the first principle. The second principle is we have been a strong player in India, Tata Motors, but we would like to be a global player, because you don't want to have your automobile business is a highly cyclical business. So you don't want to get linked yourself to only one country strategy. So you want to distribute your risk, you want to be a global player. So naturally, can this acquisition give you the right kind of a global presence, which we got through this. Technology, yes, we got the best technology. The third thing is the product range. We became the complete product range player in the passenger car. And of course, the other one is you need to get the right price. And in both these acquisitions, in Jaguar Land Rover as well as in the Daewoo Truck Company, our acquisition price, though we were criticized for so-called criticism that we were highly criticized for paying very high price. But I must tell you that, as I said, we have got 3 times more profit. We have kind of our payback period has been very low. We already got $6 billion from $2.3 billion investment we made. And most importantly, our acquisition price, that's the point I was making, was lower than the book value of the company. So usually people pay exorbitant price, create goodwill on the balance sheet, and then they have to justify the goodwill on the balance sheet, and impairment and all these tests are applied. In our case, we bought both the companies at a price which was lower than the book value. So we are sitting on premium and not goodwill.
Okay, great. Surprisingly, you didn't go for the Aston Martin deal while Mahindra put in a bid, but Tata didn't. Was there any reason?
No, I think we already have Jaguar Land Rover, so there is.
So you didn't want another brand.
Enough in terms of the presence in the premium segment.
Okay. What about your banking plans? When are you getting a bank?
My answer would be, we'll wait for the banking regulation guidelines to be issued by RBI. I really don't comment. There has been so much being there's a point which has been raised by many distinguished personalities and institutions, whether the large industrial houses should be allowed to get into banking or not. So I should not comment. We should rather wait for the RBI to issue the guidelines.
Great, thank you very much. Thanks a lot,
Thank
Mr.
you.
Kadle.